Good evening, ladies and gentlemen. It's Brian Hale with Mortgage Advisory Partners. You normally don't get to see the back of my office this way. I'm normally facing that direction and you get to see my screen with our logo and that kind of stuff. But actually, it's now Sunday evening, May 5th, Cinco de Mayo. My best to everybody celebrating Cinco de Mayo. I just flew back this afternoon from San Antonio, and near as I could tell, they've been celebrating Cinco de Mayo for about 3 days. Flew in tonight, and I'm recording this tonight because actually I'm getting ready to get in the car and drive to San Diego for the Mortgage Bankers Legal Issues Conference, so I can attend some of the legal issue, compliance, and emerging topics coming up out of the industry this week, tonight, tomorrow, Tuesday, and Wednesday morning. Then I'll be back, but I'll be working during the course of the 3 days as well. But I wanted to try to get this video out tonight over the top of our newsletter, and this will be posted tomorrow morning. Above, you'll find the link to subscribe to the newsletter. As I say every week, you should subscribe. It's free. If you subscribe, you get it on Friday morning or afternoon, depending on when the newsletter comes out. And again, I always tell people I don't write the newsletter, I publish the newsletter. But I did a fair amount of research to try to find the right newsletter to get it out to salespeople, managers, areas, regionals, and others to try to help you understand what's going on in the market. In addition, our website is above, and a couple of times in this last few weeks, I've talked about something called the Weekly Roadmap. I encourage you to go up on our website and take a look at the Weekly Roadmap information. There's a video up there as well that kind of explains what we're looking to do. We're expecting to launch the Weekly Roadmap in the latter part of June this coming year. But if you want more information, you can leave your name and information on our website, and we will begin to communicate with you on the launch of the Weekly Roadmap. That said, this week's newsletter talks about the fact that despite bigger bumps, the Fed still sees a path to lower rates ahead. And there's some really excellent charts in this week's newsletter that kind of shows you kind of what's happening with mortgage rates versus the Treasury yields. It shows you the kind of progress that's gone on in the employee or employment cost index as well. Last week was a really data-heavy week. We had Treasury auctions. We had obviously the Fed announcement on interest rates on Wednesday with Chairman Powell's news conference, where the markets tend to hang on every word that he says. We actually had some difficult news that came out on Tuesday, which suggested that inflation was still a little hotter than the Fed was hoping to see. But then on Friday, we kind of got the real number, which was the April jobs report, which came in at 175,000, well below consensus estimates, and the unemployment rate popped up to 3.9%. And in addition to that, and a really key number that was overlooked by many of the analysts, is that the hourly wage number came in lower and better, less inflationary than we had been seeing over the last couple of months. This week, we're going to see jobless claims comes out. I think the jobless claims number is going to come out on Thursday at 8:30 a.m. Eastern. It's expected to be 210,000 versus approximately 208,000 in the last period. This number has become a little bit of an anomaly in that I think it's the last 5 out of 6 months, the number has been exactly the same, which suggests that to some degree we may have some kind of issue with the data. I don't mean in the way that somebody's manipulating the data, but the way data is accumulated and then adjusted for seasonality. Sometimes you end up with kind of an odd situation in the data. So it'll be interesting to see. From an inflationary standpoint and a better interest rate standpoint, we really want to see jobless claims go up, not be lower. If they are lower, that suggests, again, a very strong employment market, and will continue to be contra lower interest rates and really be representing the fact that inflation is still strong because the economy is still strong. So with that said, I encourage you to read through this newsletter that's posted above. I encourage you to subscribe. I encourage you to go up on our website at mortgageap.com. There's a button on the landing page of our website to understand what's going on with the Weekly Roadmap. We're very excited about it, and I'm going to be talking a lot more about it in the future, but I'm going to kind of just wet your beak a little bit right now with going up and taking a look. So I encourage you to focus on that, encourage you to watch the data going forward, and I look forward to talking to you again soon, and I hope you all have a great week. I'll be reporting some information, I'm sure, from the conference. And for those people who are subscribed to the newsletter, I've begun sending additional curated information every day or every other day that I think would be helpful to the understanding of what's going on in the markets, what's going on in real estate, what's going on in the mortgage business. So again, encourage you to subscribe. With that, you not only get the newsletter, but you get the curated information that I do research on every day, and I'm beginning to push out to the subscribers. Subscriptions remain strong. I appreciate everybody who's subscribed, and again, wish everybody to have a great week this week. I look forward to talking to you again soon. Take care. My best.